Hello everyone and welcome to the channel. Welcome to the third video on our advanced course on Forex trading. On this particular level, remember, we're just fine-tuning things and we're just bringing you guys advanced tips on how to trade Forex. And on this particular one, I'm still going to be bringing you guys some advanced tips on how to trade news in Forex. All right. And on these advanced tips, we're going to be talking about some very peculiar points which you need to be able to look out. Have you ever seen a situation where you place your trade, or maybe let's just say you are trading the news, you place your buy stop and your sell stop, and immediately the news is released. The market goes up, trigger your buy stop, comes down, trigger your sell stop, immediately within a matter of a second, blow your entire account, and at the end of the day, you come out without a profit. And you even think maybe it is personal, or maybe the market is against you, or maybe you are cursed or something. No, you are not cursed. It's not personal. The market is not against you. It's just that you don't know what you are doing. So if you have somebody who have ever suffered, if you have ever suffered from that, or you want to be able to know how to prevent that, then smash the like button below and let's get on to the video. Hello everyone and welcome to my channel. On this channel, we talk everything about trading, business, crypto, personal finance, and tips to help you stay profitable as a Forex trader. And my name is Ndemazeahgodlove. So we're going to be talking about some few things about news trading which you have to be on the lookout. If not, you might blow your account. You might know how to use all the two strategies I've given you guys on news trading. You might know how to use the directional bias strategy, or you might know how to use the strategy, but at the end of the day, you won't still be able to make any money. So even talking about news trading, there are three things we look out in news trading, right? We look out for what we call the previous data. We look out for what we call, or let me just put it this way. So we look out for, there are three data we look out in Forex trading. We look out for what we call the previous data. The previous data. We also look out for what we call the forecast. The forecast data, then the actual data. All right. So these are the three most important. If you check on this screenshot, you see. If you check on this screenshot, you see we have the previous data. That is the data for last month. We have the forecast. That is what the economists or the bankers are predicting that the data might come out to be. So that is what they are forecasting. Then after that, you see we have now. After that, you see we have the actual value, which is the value which is going to come out. So for a news that is going to come out, the actual value will be empty because the actual value will only come out as soon as that news is released. So how do you read this particular three data as a pro and use it to trade Forex? Because there are sometimes the actual value can be the same as the forecast value. The actual value can be either greater or less than the forecast value, or the actual value can even come out to be nothing. The news to be released and you see nothing will come out on the actual value. Or even some news events before they are released, the forecast value, there will be nothing on the forecast value. But unfortunately or fortunately, once the news is released now, you will see something on the actual value. So how do you maneuver? How do you maneuver with those different scenarios? Good. So now the first scenario I want us to look out. On a scenario where the actual value, remember A. Let's call this one A. Let's call this one, the actual value is A, the forecast value is F, and the previous value is P. So let's look for a scenario. Let's look for a scenario where our actual value, right? Let's look for a scenario where our actual value is greater or less than the forecast value. Don't mind, this is mathematical science, but you already, from the way I'm saying, you understand what I'm talking about. So if you're somebody who is not even versed with mathematics, this is not rocket science, all right? This is not rocket science. You can just understand. So this sign just stands for if the actual value is either greater or less than the forecast value, how can you trade in that particular situation? So in this situation, let's just assume we use trading something like NFP. And if NFP comes out and if it's positive, if the data of NFP is positive, it means it means the forecast value is greater than the actual value. So there you will be able to see green. So let's just say here they were looking at 200k jobs. They were forecasting that the data will come out to be 200k jobs. But fortunately, the data came out and it was instead, let's just say 300k. You see, so 300k is obviously greater than the forecast. So that is why I said the actual value, the A, is greater than the forecast value. So in this case, if you are talking about NFP, the market will trend up, right? The market will trend up if you are talking about USD CAD. And if you are talking about Great Britain Pound USD, the market will go down. So the market will trend in one direction. And if the data is still negative, instead of 200, you have now 150k. 150k. It means the actual value is less than the forecast value. So in that case, the market, if you are talking about the USD CAD, the market will still drop immediately the news is released. So in this situation, you'll be able to see a result. You'll be able to have a result as soon as the data is as soon as the news is released, and you're able to see your actual value, your actual result. Compared to the previous detail, you'll be able to make a decision immediately the news is released. But in most situations, don't even focus. Don't even put your attention on the forecast value. The only thing you should be looking is on the forecast value. The only thing you should be looking is the actual value column. All right? Because remember on the screenshot I said, you can see you have the previous, you have the previous, you have the forecast, and you have the actual. The most important thing you should be paying your attention now is on the actual. The actual, if it comes out and the data is greater than the forecast, you see it will be green, meaning it is positive, it is bullish for that particular currency pair. And if it comes out and you see red, you should just be looking, just focus on the colors. Don't even mind, just focus on the colors. And if it comes out and you see red, it means that particular data is negative or is bearish for that particular currency pair, and there's a high indication that the particular currency will drop. All right, so that is about that particular scenario. But now see this other scenario. All right, I'm giving you guys different scenario. What if now your actual value is equal to your forecast value? You see, that is another scenario. What if your actual value now is equal to your actual value is equal to your forecast value? This is what people suffer all the time. You see the news is released, and you're expecting something to happen. You have your buy stop in place, you have your sell stop in place, but unfortunately, you see the market will just do this. The market will just do this. Trigger your buy stop, trigger your sell stop, and at the end of the day, your account is already blown out. Why? Because in most situations you didn't focus on the actual and the forecast value. In this situation where the actual value is equal to the forecast value, here you just have on the actual value column here. Let's just say here they were forecasting 200, and the same thing that came out was 200, or maybe they were forecasting that the interest rate will be 2%. And here you have on the actual value, it came out and you see 2%. Here, the particular color you see here, if you check on this chart, you can see this is an example of a situation where the actual value was equal to the forecast value. You can see on the previous, we had the previous value, we had now our forecast value, and the actual value is colorless. I don't know that particular color. I don't know if that's gray or that's white, but you can see it is neither green nor red. It is neither green nor red. So anytime you see this, where it is neither green nor red, just know the actual value is equal to the forecast value, and there is no way you can predict that. Obviously, the market will only trend if the actual value is greater or less than the forecast value. But if the actual value is just equal to the forecast value and you just see it gray like that, you have to close your positions immediately. You have to close both your buy stop and your sell stop immediately, because in such situation, the market has already shown you very clearly that unfortunately, according to our analysis or according to the battle we had, neither the buyers or sellers were able to win the battle. So at this point in time, we are advising you to stay out of the market. That is what the chart is telling you. Sometimes the chart comes to you and even use a microphone and talks to you, but you refuse to listen. That is what the market is telling you, because now you can see the actual is equal to the forecast. The market will neither go up or down. So what you instead see happening on your chart, you instead see your chart, your chart, and since it is a news a very violent news event, and before that news event was released, banks, hedge funds, liquidity providers, they were all speculating on that particular position. So what will make the channel to be moving up and down in a violent manner is speculative. All right, it's speculative, and that speculativeness in the market can blow your entire account. So anytime you see A equal to F, actual value equal to the forecast value, close your positions immediately. Now, okay, let's go to the next scenario. I hope you are enjoying this. Let's go to the next scenario. Let's go to a scenario where two same currencies have major news events affecting the same currency at the same time. Good. So this is what I'm saying. Let me wipe this, or let's go to the other slide. What if you see a particular news event like this, where, okay, this particular news event, we have let's just say we have for the United States dollar, for USD, we have the GDP. And then we also have for still USD, right? At the same time, remember, this is happening at the same time. At the same time, we have employment. We have employment rate. All right. Remember, we have GDP and we have employment rate happening. Let's just say this is 2:30 p.m. happening at the same time. So you go on your investing.com or on your news app. You go on your news app and you see at 2:30. You put on the table, you filter it and you put on the high impact news. And now it's still on the high impact news. You see the USD, or you see on the particular news events that are going to be affecting the USD. You see GDP and you see employment rate at the same time, affecting the same currency. Remember, they're all affecting the United States dollar. And now at that point in time, you're doubting yourself, like, okay, since I have two news events affecting the same currency pair at the same time, what can I do? The best thing to just do at that point in time, remember, this is Forex trading and we have ample amount of opportunities. We have many opportunities. So the only thing you can do at that point in time is just to stay out of the market. Simple. Don't try to force situations. Don't try to force trade when there's no trade. Anytime you see two major news events affecting the same currency, affecting the same. How are you going to put? Let's just take your United States card for example. What if now GDP came out and it was positive? Let's just say this one was positive for GDP and the unemployment now was negative. All right, so this one was positive for GDP and then unemployment rate was negative. This one, the GDP, gross domestic product, was positive for the United States dollar, and the unemployment rate was negative for the United States dollar. You see, so one news event will be telling the chart that go up, and another news event will be telling the chart that go down. That is why you see something like this. You see something like this. All your positions will be triggered. Don't even look for any open position you have on your chart. Trigger that, liquidate all your positions, and your account will go to zero, or you lost all those positions. Why? Because you had two major news events affecting the same the same currency at the same time, and you didn't know that, okay, if you have two major news events affecting the same currency at the same time, the best thing to do is just to stay out of the market, and then you can come back with a price action strategy after that to trade. That is now another scenario. This is the last scenario. So anytime you see two major news events affecting the same currency at the same time, remember I said at the same time, just stay out of the market. This is the last scenario. The last scenario is when we have two major news events affecting different currencies at the same time. Remember I said, so let's take NFP. See this is going to make sense now. Let's take NFP, all right? Then we have the currencies we have USD, and we have Canadian dollar, all right? We have USD and we have Canadian dollar. Good. Under USD, remember we have under USD. No, let me instead put the time. So let's just assume the news is going to be released at 2:30 or anytime. I'm just using my time for example. So let's just assume the news is going to be released at 2:30 my time. And here on USD, I have NFP, and on Canadian dollar, I have Canadian employment employment rate. All right, I have Canadian employment rate. So these are two major news events affecting different currencies at the same time. This is the most important thing, at the same time. But some of you guys, since you want to trade NFP, since you want to trade your NFP, or since you want to focus since you want to trade NFP, or since you want to focus on employment rate, you forget the fact that you have two major news events affecting two major currencies at the same time. Now, what you have to be very, very careful at this point in time is the currency pair you use to trade that news. The currency pair you choose, the choice of the currency pair is what will either send you to your early financial grave at this point in time, or make you millions. Your choice of currency pair is what will either make you money at the end of the day or blow your account at the end of the day. Good. Let me show you what I'm talking about. Here we have NFP affecting the United States dollar, and we have an employment rate affecting the Canadian dollar. Just imagine now, since I already advised you guys that if you are trading the news, make sure you use currency pairs that have United States dollar attached to them. Like if you are trading the Australian news, use Australian dollar United States. If you are trading the New Zealand news, use New Zealand USD. Somebody will just come here, and since he's trading NFP, he just go and carry and just take maybe NFP card. Or USD card, or since he's trading the Canadian dollar, he goes and take USD card. All right. So just imagine at this point in time where you wanted to trade NFP and you go and take USD card. All right. Just imagine at this point you went and took USD card as the currency pair to trade NFP. NFP came out. See this. NFP came out. Let's change this. NFP came out and NFP was positive, but unfortunately, employment rate was negative. So you see, so on this particular chart, this is where your account will be blown out even before a second, in less than a second. Your account will be blown out. Your account will go to negative because at this point in time, this is the chart of USD card, right? One news event, the NFP is telling the United States that go up. And then the unemployment rate, since it is negative, it is telling the Canadian dollar that go down. That's why you see something like this. You see that violent movement. You see that violent movement at the same point, going up, triggering your buy stop, coming down, triggering your sell stop, looking for all your stop losses, triggering all your stop losses. Why? Because you are using a currency pair that have major news events affecting both currency pairs at the same time. So what you have to do here, the best thing you have to do here, the first thing you have to do here is to choose the particular news event you want to trade. So let's just say I want to trade the NFP. So I've already made my choice because this is a TB. NFP always comes out the same time, Canadian employment rate, 90% of the time. Most of the time, every Friday, that is what happens. But I'll obviously choose NFP. Since I've already choose NFP, what I come here is I need to now make my choice of currency. And my choice of currency is not supposed to have the opposite currency. Remember, my choice of currency should not have the opposite currency. So here I can use gold. I can use gold, which is SAU USD. I can use GDP USD. I can use GBP USD. I can use USD JPY. So you see what's going on. At this point, we have only that particular currency pair. We have USD. USD is not competing with the opposite, with the counteracting news event at the same time. At this point in time, we have just USD. Canadian dollar is not there. At this point in time, we have USD. All right, that is my choice of currency, and the best I trade most of the times when it comes to NFP. The best currency pair I trade is with gold, because gold is having a higher PIP value. We've already spoken about high PIP values on our intermediary, on our beginner and advanced level. So you see, I'll be able to choose all these currency pairs don't have the Canadian dollar. Now, if I choose to trade the Canadian dollar employment rate, I will make sure I choose something like Canadian dollar JPY. Canadian dollar JPY. or I can use maybe Great Britain pound, Canadian dollar. You see, Great Britain pound, Canadian dollar, or NZD card, or those cryptocurrencies, those currencies that don't have the USD. What determines me if I go and make a mistake and I choose USD card to trade the Canadian dollar news or to trade the USD news? That would be the fastest way of blowing my account at that point in time. That would be the fastest way. So that is what, those are the 4 scenarios. Those are the 4 scenarios I want you guys to always look out for. The actual value, what is the actual value, what is the differential between the actual and the previous value, and what if the actual value even came out and it was nothing? And in some situation, before the news is for news events, that before that news event is released, there is no forecast. If you see a news event like this, where on the forecast section you have nothing, don't even try trading that particular news event. Don't even try putting your sell stop or your buy stop, because when the news is released, you might end up blowing your account. So in that kind of situation, don't even try placing a buy stop or say, if you don't see a forecast value, most of the time those news events end up blowing my account, or they end up in a loss. All right, so thank you guys so much for watching to the end of this particular video. If you want to hear from me one-on-one, you already know what to do. Make sure you check the link on the video description to join me to check me out on Patreon. On Patreon, you have access to my Discord private community, where you join thousands and thousands of Forex and crypto traders sharing ideas on a daily basis. So you can also check the link below to use the same Forex broker I use. Make sure you smash the like on the video. Follow the other videos I'm going to leave at the end of this screen, because they are related to the same topic. So follow the video I'm going to leave at the end of the video. Watch those other videos, and I will see you guys on the next video. Peace.